Well, those low oil prices are impacting Saudi Arabia's economy and its ties to the U.S. Let's get more on this with Vidak Radonjic, CEO of Beryl Consulting. Vidak, good to have you. Thanks for joining us.
Good evening, Michelle.
So President Obama is in Saudi Arabia at a time of political tension. Saudi Arabia threatening to sell off billions of U.S. assets if Congress goes ahead with a bill saying that Saudi Arabia can be sued over its alleged role in the September 11th attacks. Obama backing down on this one. Saudi Arabia owns about $750 billion worth of U.S. assets, but does it have the leverage to really sell them at this point?
I think they're playing a high chess game or a poker game. If I can be a little bit more blunt, I think they're just bluffing, because U.S. Treasury, they own maybe $300 to $400 million, which is kind of the most liquid, obviously. And then they will have to sell U.S. equities. They will have to sell real estate. It's a little bit too much, because if they do that, there will be a market crash, and they cannot afford that because their market would go down even more. It's already down 20%.
So you're saying
in the last 12 months.
It's just a bluff. But what impact would it have on the U.S. economy if they did sell? Would the U.S. economy be able to bounce back from that relatively quickly?
I think U.S. would be able to buy some of those treasuries, and U.S. allies would buy as well. So I don't see a big fallout here, and I don't think they're going to do that in the first place. That's
well, there is always a demand for U.S. assets,
yes.
And probably other global players would step in. A big issue that's been affecting U.S. and Saudi Arabia ties is oil. The U.S. now energy independent thanks to fracking and shale gas. How does that now influence the relations?
Well, U.S. Is kind of almost independent energy-wise, but at this level, at $40, lots of companies can still go out of business. So for U.S. to be really self-independent, self-sufficient, the U.S. crude should be up to, like, say, $60 or so, or 65. Then we could talk about it.
And that's part of the reason why Saudi Arabia was not cutting production, to squeeze out those independent U.S. oil producers and the frackers.
Now they're having issues because of that. Yeah.
Well, Saudi Arabia is also feeling the pain of those low oil prices, as we said, going back to the credit markets for the first time in 25 years with that $10 billion worth of debt. How badly is Saudi Arabia's economy feeling the heat right now?
Right. First time they issued that was in 1991, when there was invasion of Kuwait. There was only $1 billion. Now it's $10 billion. So now, going back to that question, your first question, how can they afford to sell $750 billion when they have to actually raise money? So it's really, going back to your question again on $10 billion, the LIBOR rate is going to be kind of richly priced, 1% over the LIBOR. So who's going to make money in these deals? Investment bankers. So they're going to be advising them, etc.
Well, we can see that Saudi Arabia is really feeling pain from these low oil prices. They're suggesting an output freeze. The top oil producers met in Doha on Monday, but a freeze was not agreed upon, Iran being the sticking point. They're saying, hey, sanctions have just been lifted. It wants to carry on pumping. Do you think there is any possibility of an output freeze agreement coming from everyone?
I think Saudi Arabia needs to be more realistic, and basically Iran has not been pumping oil, has been under these sanctions. So there has to be compromise. I mean, they're not really in this situation where they can dictate to the whole world what the world should be doing. They're just weak right now. The economy is not very strong.
Compromise between Saudi Arabia and Iran, very unlikely. But if Saudi Arabia, being the top oil producer, unilaterally decides to cut its own output, what impact would that have?
If Saudi Arabia unilaterally decides to freeze,
yeah,
the impact would obviously the oil will go up a lot. We will have another problem. There will be an inflation, because we have to understand that U.S. is still importing a $1 million barrel per day from Saudi Arabia. So
we've seen some stabilization in oil prices, largely due to what's going on in Kuwait and the production halt over there. But over the next month or so, and then over the next 6 months, what is your outlook for oil prices?
I would assume oil should be around 40 levels. I don't see it going up to 60 because the economies around the world are very weak. Is it going to go back to 20, 25? Not likely, maybe 35, 30. I would say range between 35 and 42. That would be a reasonable range for the next 12 months or so.
All right. Thanks as always for your insight, Vidak Radonjic, CEO of Beryl.